Welcome to the WTR Small Cap Spotlight podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's special Healthcare Happenings flashcast, I'm being joined by my healthcare equity research colleague, Robert Sassoon, to discuss his latest industry report titled The Psychedelics Investment Environment, a New Era of Optimism. Good morning, Robert, and welcome back to the podcast.
Thank you, Tim, and good morning to you.
Robert, as you've heard me privately share with several CEOs in the space of late, I've been a military junkie since early childhood after being profoundly impacted by the return of three uncles to rural Ohio from the Vietnam War, two of whom, I might add, earned Purple Hearts there, leading me to eventually serve myself in the Ohio Army National Guard for 4 years and the Maryland Air National Guard during grad school. The reason I bring that up is to the extent that medicinal psychedelic breakthroughs can address veterans' PTSD, not to mention millions of other sufferers around the world. I'm keeping my fingers crossed for the players in this burgeoning healthcare sector. So with that uniquely candid introduction, let's dive right into this important topic. First off, Robert, it's been a very dynamic period in the psychedelic sector of late. Can you please elaborate on what this means for investors?
Yes, Tim, it's been pretty dynamic, to say the least, particularly the month of October, with nothing less than a fundraising frenzy, albeit limited to three companies. But before I get into that, allow me to go back briefly to 2024. So the psychedelic industry began last year in a euphoric state, with great expectations that this would be the year that MDMA would become the first Schedule 1 psychedelic substance to make that critical breakthrough and become a legal pharmacological tool in combination with traditional psychotherapy for the treatment of a mental health disorder, specifically PTSD. There was a big bump in investment in the first quarter of 2024. However, by the end of that quarter, the cracks began to appear, starting with the ICER report, if you remember, which was the first reputable body to seriously question the integrity of Lykos's phase 3 trial outcomes. That report snowballed into an overwhelming FDA advisory committee vote against recommending approval of treatment, a recommendation that the FDA ultimately followed in the summer of 2024. The investment momentum started to wane in the second quarter of 24, post the ICER report, and investment all but dried up in the back half of the year. So as far as valuations were concerned, publicly traded psychedelic companies remained under pressure. The only psychedelics ETF that trades now in the US is PSIL. That gave up 25% in 2024, reinforcing the downtrend in publicly traded psychedelic stocks that have been endured since the fourth quarter of 21, which was the start of what became known as the psychedelic winter. So turning to 25, the first quarter did see a pretty decent pickup in investment, but the subsequent two quarters, like 2024, did not sustain the momentum, and those quarters maintained a generally cautious investor stance towards psychedelics. That is until the start of the current quarter, when we suddenly witnessed fundraising on steroids, notably from three publicly traded companies. MindMed executed the largest ever single financing round in the psychedelics sector, raising capital of more than $250 million in gross proceeds. Cybin completed its largest ever financing round, raising $175 million, while Atai, which recently completed its merger with Beckley Psytech, raised $150 million. In fact, that was Atai's third funding round this year, with the company raising a total of $263 million so far in 2025. Anyway, the aggregate funds raised in the fourth quarter thus far total more than $580 million, all of this capital being largely raised by the three companies to fund the advances of their late clinical stage programs. The fourth quarter total is already the strongest quarterly fundraising since 2021, and the third highest on record behind the second and first quarters of 2021.
Great color, Robert. Thank you. Moving on, what factors have contributed to this renewed investor confidence, and how does the current investor landscape differ from the hype-driven cycle of 2021?
Yes, thanks for that question, Tim. So let me start with the second half of the question. There are notable differences between 2021 and today. While 2021 remains the peak of psychedelics investment in terms of raw numbers, investment in psychedelics in 2021 totaled something like $1.9 billion against the $1.2 billion in 2025 to date. There are, I believe, significant qualitative differences which favor 2025 and over 2021, however. First, as you probably described, the 2021 investment surge reflected a hype-driven cycle. Remember, we were in the midst of the COVID pandemic, mental health concerns were elevated, and there were a bunch of early clinical stage drug developers that were promising to deliver novel therapeutic models using psychedelics to treat a variety of mental health disorders, hunting for capital. So in 2021, the capital raise came from over 100 financing rounds, an average of 27 rounds per quarter. In 2025, there have been only 35 funding rounds and only three so far in the fourth quarter, which, as I said, represents the largest investment quarter since 2021, signaling the move toward fewer but significantly larger financings. So I'll throw in some more stats here for you. The average deal size in the current quarter stands at almost $200 million per transaction, which is 5 times the average size in the second quarter of 2021, when a record total of $800 million plus were raised by psychedelic companies. So we're seeing a qualitative upgrade in an investment in the sector, reflecting more considered strategic capital deployment into companies with late-stage clinical assets that have proven IP and that can show clear commercialization pathways. So what about this? That leads me to quickly address the first part of your question, effectively what's behind the thawing of the prolonged investment chill in psychedelics. I believe the psychedelic sector has entered a renewed phase of optimism in 2025, fueled by tangible progress rather than speculative hype, as was the case in 2021. Multiple players, including those that have raised substantial funds this quarter, have reported landmark phase 2 successes and have advanced or are in the process of advancing their programs to phase 3 trials. Adding to the momentum, we've seen the largest big pharma deal in the space, with AbbVie acquiring Gilgamesh's bretisilocin depression program for up to $1.2 billion, including a recently disclosed, not inconsiderable upfront payment of $900 million. All these factors signal a significant strengthening of investment confidence in the sector.
Very interesting indeed. Can you please talk about how this is impacting valuations and how sustainable you believe this to be going into 2026?
Sure. Well, just about another 6 weeks to go to the end of the year, barring any anticipated mishaps in the remaining weeks. 2025 will be the best year for investments in psychedelics since 2021. So if we look at the PSIL ETF, it is up by more than 50% year to date. And among some of the leading players, Atai's share price is up more than 200%. GH Research has doubled. MindMed is up 80%. And Compass Pathways is up 50%. One glaring exception I would note is Cybin, which has been curiously overlooked with its share price in negative territory so far this year, despite the excellent progress it has made both from a clinical and financial perspective. Now, in terms of sustainability, it seems that the investor confidence based on recent surveys is brimming, especially among institutional investors, and we've seen that in the take-up of the latest offerings. So one survey shows a clear majority of investors expect to deploy the same or greater amount of capital into psychedelics over the next 12 months. So we're really getting to the business end of the clinical development process for a number of programs. So 2026 will be a year of multiple catalysts, with several companies scheduled to report phase 3 readouts for investors to feast on. So if they deliver the hoped for and expected results, I see no reason why this new era of optimism in psychedelic therapies cannot be sustained.
Excellent. Well, thank you, Robert Sassoon, for those interesting insights into the psychedelics sector. Given the rapid pace of the developments in psychedelics, please join us again, Robert, soon for further updates. And I look forward to you bringing psychedelic industry CEOs back on the podcast as well. For investors interested in psychedelics investment opportunity research, please see Robert's written research and podcast on this topic on Water Tower Research's website. Thank you for listening, and don't forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the company's small cap written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of the WTR Small Cap Spotlight podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.